What's up, YouTube? It's Todd Horst here with Tasty Tracker, and I have another small account challenge update today for the 2021 account. So let's jump right in. So first I wanted to show the account. Currently it's sitting around 1239. Let's go over here. Actually, okay, yeah, 1250. Somewhere in that range. The point is, it's not the highest it's been, but it's getting pretty close. We can have a look at our nice little chart here. There's not that many data points yet, so it looks like it jumps around a lot, but the trend line in the back here is sloping up, so that's obviously the right way we want to go. But it's not too far off the high. 1290 was our high, so we're about $40 down. Obviously, with the downturn with GameStop, that basically took all of our positions back down to zero or close to. And so it is actually good to see that we rebounded here rather quickly. That's usually the way things work with those kinds of moves, but not always. So if we go over to our positions, we only have Apple and AMD. Those both have 45 days to expiration. That's right around when I generally like to put on positions, but because this is such a small account, I went out further to allow myself more time to close, just as extra insurance. And then the flip side of that is you get better strikes because 40% in the money is further down in the options chain. I can show you that in a second. But I've shown that before. You can also visualize that in Thinkorswim with the probability cone. That's one of the indicators as well. And that really paints the picture at how the further out in time you go, the further up and the further down the stock can go. So anyway, so you're going to get better strikes by going further out, and you're going to collect better premium because there's more value, extrinsic value in that position. The flip side is that it takes longer for those positions to come into maturity unless there's a huge move up in the stock, but I'm not counting on that. So the reason I'm going out again is for safety for the small account. On a larger account, typically I'm aiming to put positions on at 45 days to expiration. That's not always the way it works. It just depends on the cycle, where the market is, and numerous other variables. So yeah, so here is the account. Let's go over to the home page. I entered in the first two positions in the first week, and then I waited maybe a week or most of a week to enter in the third position. That right there was enough to get a lot of people not interested in the style, which is good to really get the people that enjoy this type of style to get down to just those people. And it's going to be the same here, where not only did it take a long time for that position to close, but then it's going to be another little bit until I can put another position on. Now, where the market is at right now is actually pretty good. So I can go over what I mean here. Let's go to SPY. I posted a chart on Twitter, but basically SPY is now above the 20-day, which is great. It's been following the 20-day for quite some time. We had the GameStop issue, but that really gave it a chance to pull back and then confirmation to pop back up here. MACD and RSI look great. This is actually a great place to add if you wanted to do a position on SPY. I don't typically do that because the pricing is so efficient that you can't really collect that good a premium. But if you wanted to, here's actually a good place. So that's at a good spot. Because of this dip, a lot of the other tickers that I trade are actually in pretty good spots as well. So I'll either get on a new position very quickly, or it's going to be another week or two till I maybe, I always say that and then I end up putting something on the next day. So, but we'll see. Yes, so between that and the amount of time that I held on to this position, both things are, again, things that will shake people out. But if you look at what we actually did in January, up almost 23%, and you have to ask yourself, again, if you're coming from Wall Street Bets or something like that, 23% is nothing. For an individual position, because they're used to large gains, but they're used to such large losses that in a month's time most people aren't making 23%. We did here without basically any stress, 3 positions on that you could have entered in a very wide range of time. Really, you can still enter in the AMD. We're only up $14. So there's this huge amount of time that you could have entered. Very, very low stress, and we're still up 23%. Now we're down 4% for this month, but it's only the second day of the month. We have plenty of time to bring that up. I'm not obviously worried about that in the slightest. So we cashed out the first position in Amazon for 125. So if I go over here to options history, I can see the exact days I put things on, and then today I closed for a net of 125. Now I held this one a little bit longer just because Amazon today and yesterday had a huge ramp up. And so it would be a little bit silly of me to not lower this a little bit. I think it was set for like 90 or 95 or something like that. I forget what I had originally set it for. But I thought, oh, well, I'll set it down to 70, see if it gets hit. And sure enough, it got hit. And this was out while I was out of the house, actually. So it's good to just get an email that things are closed. We held that 26 days. So that's actually right about average for me. Maybe a hair longer, depending on the type of position. So it's on the longer end of the spectrum, but it's certainly not the longest. And we can see right now I've held the Apple for 29 days. So definitely within the margin of error, I would say. Okay, so yeah, I wanted to cover that, percentage gain is great here. $125 on a $1,000 account. I consider that a win. Slow and steady progress. And I wanted to go over the positions, this history, and count balance. So I think that's basically all I wanted to show you here. Today is all green. So, this is the perfect example of when I don't want to enter in on a position. I want to enter in on one of these big tickers. If they're taking up a lot of space on the screen. This is the, I think this is the S&P, right? Yeah. Categorized by sector and industry. And then the size represents the market cap. So yes. So, I want to target something here that is very visible. MA I play a lot, JP Morgan I do a little bit, PayPal occasionally, Apple, Microsoft, Google, Amazon, Tesla. I don't really do Tesla on small accounts just because it's a little bit too volatile, but on a larger account I do. Starbucks, I'll even go to McDonald's, but usually premium's not too great there. Adobe, anything here that you can just look right off the bat and know what the company is. Those are the ones I'm targeting. Anyway, the point here is these are all green today. I posted the other day when it was all red. That's the time you enter. Today's when you take your profits and you sit on your hands and you wait for the next red day. Going back to SPY here, it's every couple days. We have 1, 2, 3, 4, 5, and then it's 2 days that are down, and then here we're hugging. So it's only really every 4 or 5 days, very commonly, before we get another touchdown and another touchdown. On the touchdown is when you enter. Yes, I mean here was a 2-week span where things were pretty good, but that's not usually the case. Usually we get these touchdowns once a week, or sometimes even more than that. So today's the day you take the profits and you sit and relax and watch your account go up. Okay, so let's look at the charts for the position that we just got out of. Amazon has earnings after hours today. That's why the big hop up. But we're still not, again, I know my chart here is a little bit crowded. Normally I don't like it this much, this many lines. But here is a uptrending line. We've got the green line is was our strike that we needed to be above. And we needed it to be above until this green. So we did clearly make it in this quadrant. I'm looking for the price to go up more than anything. Yes, it's good that theta decays at it. It's on my side, which is one of the many elevating factors that I use. I want to enter in a good position. But more than anything else, I want the stock to go up so that it closes out our position as soon as possible. So here we have a descending kind of wedge. And all the SMAs are grouped down here tight. But here we have an upward sloping line and it's still below that. So ideally, I'd like it to get above that. Honestly, I don't see that happening. I think we probably get a bounce off of there. and come back down here for a retest. But this might act, the SMAs might act as better support now, and then we can get some more gradually higher highs. As a rule of thumb, especially on the small accounts, I don't enter in positions that I just closed out of. So let's just go back there 1 second. When we entered in, it had been consolidating here. It had come down and touched. Let's go see just so that I know exactly what day I entered on. That was the 7th. 1-7. Yes. Okay. So this is us right here. So not the whole way down here, but basically we're right below the SMAs. So I'm feeling confident at this point that it's already started the downtrend on the MACD. So in theory, it should lose steam in a couple days. And in fact, it did. Yeah, about 4 or 5 days later, it started losing steam and then curling back up. MACD was fine. And then you get, again, same thing a week later, started curling back up. But yeah, we enter in at a time when it's down here. Lost my train of thought a little bit there. Oh, I wanted to show that now's not the good time to enter. Right. Okay, so now if I look at the RSI where we're at now, it's kind of at a peaking point. If we look back here, it's 65. Around here is 65. Around here is 65. Yes, it certainly can get above that for sure, obviously. 70, 80. But the point is, this is a common point here where we might consolidate or have a pullback. Similarly, MACD is kind of getting up there again. Green volume is high. We've got earnings, which is good for our position, but not uncommon to see a drop after earnings. All of these things point to after you close out of a position, give it a break. Don't even look at the ticker. Just move on with your life. Revisit this in a week or two. See, come back here and see where things are at, whether it's a good time to enter or not. But at this point, Amazon is dead to me as far as this account is concerned. Okay, so now we have Apple and AMD, so we'll go over those real quick. Got my dogs on me. Okay. Okay. Apple, I was expecting it to come back down here to the 50, and it didn't even really do that. It stayed up here on the 20. So even though, it's a bit of a downturn here on the MACD, it's not really. This is just a form of consolidation. So we're consolidating here at 135 to 140 maybe, and we'll just bounce here for a minute. But we can already see that the red volume is weak. MACD can very easily do one of these numbers where it's only there for a day or 3 or 4. It's not like it has to be some drawn out thing with some deep red bars. It can very much just be consolidating for a couple of days, just like this was. And now we're post earnings. So really right now is a great time to enter into Apple if you're not already in, because it's sitting above the 20-day. MACD is down but pretty weak. RSI looks fine. Red volume looks fine, like it's weakening. So I'm not going to enter in another Apple position under this account, but it wouldn't be a bad idea if you have a different account or a larger account that you could start entering in some more positions. That said, we are up $60 on our position, so you're obviously going to have to get some higher strikes or go further out in order to make that a viable play. So AMD is the stinker of this set. I think it's easy to get spooked when you're starting this style. Not only are you red to begin with, but then some of these positions can go deeply red. We're playing a probabilities game where, especially on Tastyworks, you can see the probability in the money. Robinhood you can see, but it's not as evident to me at least. But the point here is we're post earnings, so that's out of the way. The 100 day is acting as good support. Let's turn on the 200 day here. So that's the whole way down here. I definitely do not see this happening. There's several layers of support here. We could see something like 78 would be a level of support, but ironically 75 is support back here. So we have this support here, and then as well as the 200 day. Okay. So what I don't like about this chart, obviously, is this sort of down trending channel. But on the plus side, it's the 100-day is acting as good support. So RSI and MACD, again, look great. Weak red volume. So I really do expect this to hold. And our sold leg here is going to be the 85. So I have that highlighted in green over here. So again, it really just needs to be above this green line and before it hits this blue line. So I definitely think this is 100% possible. I haven't lost faith in this position. And, if you really wanted to get out of it, you could get $11 back right now, and then maybe even go for some lower strikes. But I honestly think where we're at is good. We're right below this 100-day, which is right where we need to be. Okay. Besides that, I did tweet about SPY earlier, but basically the market is coming back to where we were. Right now we're at 382 here. And I think it was 85. Yeah, 385 is right around the high. So we're back up to basically where we were previous to GameStop. All right, I think that's really all I wanted to say. If you have any questions, of course, let me know. As for when I'll be putting on the next position, I can't tell you that until I actually start looking at different charts and seeing what speaks to me. By now, if you're following along, you pretty much know what I'm liking. I'm liking things hugging the 20-day, going up on the chart, and MACD still red, but getting the light red, so it's weakening. RSI ready to go. Really, I have a wide range for RSI that I like. It can be anywhere from 40 to 60 is completely fine with me. But yeah, if you have any questions, let me know, and I'll talk to you next time. Thanks.